Hello, hello. This is my third attempt, or I don't know how many attempts I have done already. Um, for everybody that doesn't know me, I'm Marcos Guevara I'm from Homestay Solutions, and hopefully it doesn't want to turn. And let me just double check, see if the audio is working this time. And if not, I'm gonna go here to second option. Here the audio is from Homestay Solutions. Double check. And the audio is working. Okay. And if not, I'm gonna go here to. Okay. So today we're gonna talk about if an S corporation is a good match for you, and we're gonna be discussing a few situations to see if you are fit or it will benefit you to actually become an S-Corp, and the transition that you can take to becoming an S-Corp if you already own assets and the benefits that come with it. So my name is Marcos Guevara. This was supposed to start at 7, but unfortunately, as you can see, my technical abilities didn't allow me to start at 7. But anyways, we're here, and let's get started with this. So the first thing I want to talk about is, I don't know if you're familiar with the cash flow quadrant of Robert Kiyosaki. And what it does is that, I don't know why is the PowerPoint not working, but let me see. Okay, that's not a good thing here. Well, I'm just gonna show it like that. That's what we have. I'm not gonna even mess with this anymore. Okay, so here you have, I don't know how many people are familiar with the cash flow quadrants of Robert Kiyosaki. Basically, it talks about choosing your structure and strategy to actually transition through the different quadrants. Because if you're just starting and you're an employee and wanna have a side job, you can actually go through transitioning to actually get to the other quadrants. And I just wanted to explain this because even though today I aim it for real estate agents, but this actually fits in almost all industries: financial advisor, Uber driver. You name it. As long as it's ordinary income, that I'm going to talk about what ordinary income is. Basically, if you provide a service or sell a product, basically that consists of ordinary income, where you participate and actually do the job to sell the product or to provide the service. That's the job you do to get the income that comes to your wallet. So employees are the first quadrant in the cash flow quadrant. So you have a job and you exchange time for money, and most of the time there's no leverage. What I'm talking about leverage is that basically you have no say, or you have no authority to change your situation. You work from a time to a time, or you go there and provide a service if you're a salary and it's a certain stretch of time, or you have to comply with certain situations. So thus you basically exchange your time for money, and most of the time you're not in charge of how much time and what time and at what time. So there's no leverage, because also there's no tax advantage. No strategy that you can do to actually get an advantage of a job. The only thing is like savings. Since basically you have a job, and if it's a good job, you can actually do something on the side, which that will take you to the self-employed. You also have a job. It's your own job, so you have a little more leverage. You still exchange time for money, but there's leverage opportunity there. And The advice is to convert. The advice is to convert as soon as possible to become a business. And then we transition to the business owner. The basically for in order to be a business is that even if you're not there, you're still getting some money. So they own a system. They exchange the time of other people sometimes, and they get advantage of the time of other people, employees, other contractors, other people that they leverage to get their product or their service to the finish line, which is the customer or the client. They do exchange time for money sometimes, but they also have money for money. And you know, as they say, money has no, it doesn't ask for lunch break. It doesn't require a break. It doesn't even, it can work 24 hours a day. So that's what business owners basically have a lot of leverage. They can leverage time. They can leverage other people, other services, systems. So there's a lot of leverage in there. And then we come to the investor side. The investor has, well, it changed money for money most of the time. There is some time for money too, you know, those insiders, inside traders, and they have to do little research. They have to find those good investments. So they do some time too as well, but there's a lot of leverage because they can atomize most of the stuff. You know, we nowadays with all these applications, we can even atomize how much money you're gonna put in where, and you don't even have to do it. It's automatic. So there's a lot of opportunities. Even, you know, real estate investing, like I always talked about. Since I'm also real estate, actually, that's one of the opportunities I see. Real estate investing is a good investment, is one of the best, and I love it. It has proven historically that you know, is always a good fit, in even in the bad times. It's actually one of the best. So that's mainly what I wanted to talk about. You know, how to transition from being an employee to being a self-employed, from being a self-employed to becoming a business owner, and then when you have the leverage to be able to invest as soon as possible. Even as an employee, you can become an investor. It's basically it doesn't matter how much. First, you have to worry about your retirement, you know, and then, you know, like your savings, they can become an investment. So that's what we need to worry about. And then I wanted to talk about, since we're talking about business, basically becoming a business, and that's where the S corporation structure fits, is in a business. And having a plan is always good. So to have a sound business and to be able to have a functioning business, well thought out structure, you have to plan. So business plan is one of the best recommendations for when they start in a business. You know, and one of the biggest thing is, I talk in other videos about, of course they're in Spanish, but I'm gonna start doing in English a little more. So I talked about savings and being ready for a business in the savings part of it. So having, you know, like 3 months, 6 months, 12 months preferably, of when you're trying to get into a business. And also if you have a job, my recommendation is to, you know, strategically start like building your business, and if you can and you're able, or if you have to switch jobs, you know, start getting jobs with less hours, and transition into where the business or your job, your side hustle, is actually an equilibrium of your income that you have in your W-2 job. So that's a good transition there when you're replacing your W-2 income with your side hustle. Once your side hustle or your self-employment gets to that level where it's actually beneficial or a wise decision for you to actually go 100% to the business, because you're probably already there with the income that you need in order to provide for your family, provide for the business. So I always say personal and home total expenses plus business total expenses, that's the minimum income you require for your business in order to go 100%. Because in the house we have a family, or probably us ourselves, we eat every day, and some people eat 3 times a day, and that's on a regular basis. So every day we eat 3 times a day, and most of us, we like a roof over our head, and we want to keep it that way, right? So personal and home total expenses plus business total expenses, basically your budget of what you need to keep living how you're living, and being doing the business, being able to do the business that you need to do, right? So that's the required minimal income to start. Always have the end in mind. Basically the plans, that's why you make a business plan, so you can know what the end in mind is. So most of the people talk about your why you're starting the business, because most of the time the why is the most important thing, not the how or the who. Well, the who sometimes is the most important thing, but it's not. A lot of people say, you know what, I can do that better than my boss, so I'll just start a business because I'm a better doer than my boss. But business requires more than just doing. It requires a mindset. Most of all, mindset. That's the key, because it's a whole spectrum. Administrative, accounting, technical, strategy, planning, sales. So there's a lot that goes into a business more than just doing. So how many people you need to meet? Because remember I said we're gonna talk specifically about real estate agents, but this fits to most of the industries. Like I said, most of the industries is kind of like the same thing. Everybody requires clients or some type of customer, and everybody requires to be somewhere at some time, and everybody requires to know something, become an expert of what you're selling. So how many people you need to meet? How much income do you need? So that's what we're talking about: the personal and home total expenses, the business total expenses. So how much money you really need? So that's what you have to think, and that's where we go to how many people you need to meet in order to be able to get that budget. So what is your budget? Personal and business, like I discussed earlier. So that's one of the key things that you have to think when you start your business, or when you are thinking of going 100%. So, and let me change this, because I guess I cannot use the little arrow. And in this case, since I'm talking about real estate agents, the real estate commissions. So I think about the 3 buckets. How, and well, in prior videos I spoke about savings, and I use the 3-bucket system, or the 3-bucket method. I don't know how you call it nowadays. So in the 3-bucket system, I always tell my business people, you know what, you need to think about plans that you have for the future. But one thing you never have to forget is that you're gonna pay taxes. Everybody's gonna pay taxes. So taxes is gonna be in everybody's accounting. And everybody is economical situation. Taxes are always playing a role, right? So my recommendation, and know that this recommendation goes that it's not for everybody, but it's just a general thing. I tell them, you know what? If you don't have any accounting system, if you don't have it, if you don't have any administrative system going on, just make it simple, and just for safeguarding, just put 15% aside. 50%, that's barely the self-employment taxes. Think about marketing. How are you gonna get these people to come? So you also have to think about how much money you're gonna put aside for marketing, and you have to think about the business expenses. So in that thought process, so you need to start thinking of not that your commission is not gonna be all yours, right? So you have to start thinking first of all of taxes. If you ask me, you wanna be safe, you wanna be sound. Well, make it 25%, but 50% is better than nothing, right? Better than nothing. And then here's where we get to the best part of this workshop video. So business structure. What type of business structure do I do? Corporation, an S corporation, an LLC, or even a sole proprietor. I'm just starting. I don't want to deal with that stuff. I don't want to pay here in California $800 for an entity, right? Every year, and probably I'm not gonna even take advantage of it. So I don't even have a house. I have no assets, nothing. So what for me, it just probably I just can start with a sole proprietor and just go in my way, right? So we're gonna discuss what is the difference between LLC and versus S corporations. If you own other property, or if you own a house, for example, if you own a home and you want to start a business and you have other investments, probably you have rental house or some other asset that some other investment property or some other investment out there. I always tell people, I don't know how much liability your industry has, right? For example, in the case of a financial planner, or a real estate agent, or an insurance broker, in those cases, there's some liability there. Sometimes you make the wrong recommendation and you probably think that you're doing the best for this client, and they take it a different way, or they don't understand you, or you just do a recommendation because you're nice and because that's what you do. And there's something that you get into trouble legally, and they're suing you. So, or not even that, just you're driving in the street, and some little kid, God forbid, or another person runs into the street. You run over them, and probably something bad happened. They end up in the doctor, and you have to pay all those bills and all that stuff. Or you have an accident and you're crushed to a house, something like that. So that liability when that happens, it can go into your personal stuff. And if you don't have LLC or an S corporation or a good structure, then it can come to your personal stuff, or if a client falls in your office or something like that. So having a structure sometimes is just to separate you from the business, your personal life from the business, and in case something happens to the business, it doesn't mess with your personal stuff. And it has to do also, the structure has to do with your net income. For example, in the situation of, first of all, LLCs, they don't save taxes, right? Most LLCs and S corporations are pass-through entities. C corporation actually is not a pass-through entity, it's an entity, so a full entity. So corporations are like basically another one of your child or a person. So they pay their own taxes, and everybody that is involved pays their own taxes too. So it's kind of like that's what they call it, double taxation. So when it comes to S corporations and LLC, they're pass-through entities, which always the paying the taxes part is gonna end up in you. You're gonna pay those taxes, right? And it is a good thing. It is a good thing in a sense, but it's also a bad thing in a sense, right? It depends on your situation. What is the best structure for you? And net income is one of the ones that actually is kind of like a trigger to seeing if you should become an S corporation. But an LLC is a good starter entity. Oh my God, it's already 9 o'clock. It's a good starter entity for most people. It's easily convertible. We can go back in time and convert it if needed to. And if we see that LLC is still a good fit, we just leave it like that. We don't do nothing. We just pay. In this case, here in California, we pay California what is owed, and we transfer all that money to a Schedule C if you're a sole proprietor. So I'm gonna explain that a little further, but that's kind of like the neat thing about LLC. It's basically a convertible. Am I in the right one? Okay, I'm gonna get better at this technology stuff, but for the moment, that's what I got. Oh my God. Okay, so one of the things I wanted to discuss is this. Are you let me do this little neat tricks here. Are you registered as a business? Do you declare all your income? That's the main question. Somebody that works as a self-employed, right? The first reason you need to register, even if you don't get a fancy structure like S corporation, LLC, or C corporation. The reason I'm asking this is because I always advise all my self-employed individuals, even Uber drivers, which sometimes I don't do, but I advise them all to register as a business. And as a sole proprietor, one of the things you can do is a fictitious business name. Fictitious business name, you get it in the, oh my God, I forgot. Let me see, I have here the answer. Thanks to a nice client that I have that brought me the, okay, I'm gonna get it for you. So, this is my little cheat sheet. It's the Recorder County Clerk. So, there's one in San Diego. There's many in San Diego. There's actually many in El Cajon, San Diego, Santee, Chula Vista. And that's where you get the fictitious business name, the Recorder County Clerk, where you pay your, real estate taxes. That's where you get that fictitious business name. It's a simple application. I do them. I charge a fee for doing it, but and I can also go get it for you. You don't even have to go, but it's a simple form. Easily they can tell you how to do it. You just research your name. You make sure that name is not being used by somebody else, by another business. So what I do personally, I research in the first place I research, because I always want to, if I'm gonna grow and make this a real business, I want it to be available, and as soon as possible I buy that freaking .com domain, right? So I first go to Google and search for the business name .com. So if it's available, that's the first good sign, right? The second place where I look is in the corporations and LLCs. I look if there's an LLC register, a corporation register with that name. If they're not registered, that's a go. Then I look in the fictitious business name site, and I look to see if there's any name registered with that name. So if there's no name registered, I'm good. So I'm taking that name and I'm buying the domain as soon as possible. And even if I will consider, well, I will make my clients consider, reserving that name in the state of California, in order in the future when it's time for them to become a structure, either get it for an LLC or for a S-Corp, which is already reserved. It's a fee for reserving the name, but it's there. I think it's there for 5 years, but you can always or 10 years. I don't remember honestly. I'm gonna look for that. But you can always keep on reserving in case you may need. But I don't think nobody stays more than 5 years with that. As soon as they start their business, the next 2-3 years, they're getting that name. They're getting their structure. It's not even because they buy a home or because they have other assets. They immediately get an LLC as soon as they can afford it, right? So sole proprietor, that's the one that I'm speaking of, with a fictitious business name. They can open a business bank account. They can get an EIN even, and then you can grow into a business structure, or you can convert to a business structure down the line when it's a better fit for you, when you actually need it. Because as soon as you get a structure, it's 800 that goes there. And also, if you get a S corporation, well, or later on I'm going to explain the cost of having an S corporation. So sole proprietor is the one that basically, as soon as you start making money on your own, the IRS and the franchise tax board here in California, they consider you a business, and they're going to say that you're a business. So if they're saying you're a business, you should behave like a business and start, getting all the advantage a business get. Because even if you don't have a structure, there's a lot of advantage to behaving like a business, right? And the first advantage is you can track your expenses. You can start behaving like somebody that is gonna grow, because you can start taking notes, because whatever you do, you want your employees to do. So the best time to kind of like see what your employees are supposed to be doing is whatever you're doing when you started. So that's a good point to start. That's a good place to start tracking what an employee should and should not do, right? So that's that. And then we have the introduction to the S corporation. The S corporation, there's no S corporation, right? It's an election. In election, there is an IRS form 2553. It's a pass-through entity. So there's no S corporation. An LLC converts to an S corporation, or you make the election. That's the proper way to say it. You make the election to become an S corp, or either you get a C corporation and then you do the election to become an S corp. So it has to be done. I think you have. I shouldn't say you. I think, but honestly, I remember. I think you only have like 45 days or 75 days to become an S corporation. But honestly, we have done those applications late, and they still allow us to become an S corp. But I mean, it's better to do what they say that we're supposed to do, right? So an LLC conversion is, for me, my recommendation always is, if somebody's trying to do business and they own a home, just like that, just a home, their own home. I always tell them, you know what? I think for asset protection and for, make it as another cover for your protection, let's go with an LLC. You're gonna pay those $800. But what we have is we have two situations here. We have asset protection, and we also have the possibility of, if you ever are, become in need to become an S corporations, we can always go back and and start the S corporation from the beginning of the year, if you already have, or from wherever time you had it already. If it's in the February or March, if you started, we can always go back and start the S corporation from the beginning, right? So we have those two elements, and C corporation conversion is when sometimes when you are already there and it's a recommendation. So sometimes it's better just to get an C corp and just get the election immediately, you know. But it depends on the situation, the recommendation, right? So the first the first benefit we're gonna get with S corporation. Remember, we're talking about S corporation. This is an election. So the first benefit we're gonna get is saving in self-employment taxes, which is FICA, which is 15.3%. I know water. No. Okay, so 15.3%. You know, when you're an employee, the employer pays half of your FICA, and you, as an employee, pay half of your FICA. Self-employment taxes, Social Security, and Medicare, right? So those benefits, your employer pays half, you pay half when you're an employee. Well, here, you're the employer and you're the employee. So you're gonna pay both of the Social Security and both of the Medicare. So you're gonna pay 15.3% just of the benefits, Social Security and Medicare, right? Another benefit we have is that's where the S corporation starts getting really nice, right? So I always tell clients that a good breakthrough for you're a good fit for an S corporation is $30,000 to $40,000 in $40,000 net. So that's kind of like the good sign that an S corporation is a good fit for you. And what we get is this net income split. So whatever is the net income, you know, the income that you got after the deductions, you know, expenses, depreciation if there is depreciation, payroll if there's payroll, you know, all those goodies that make your income pay less taxes, all those things, that's the net income. So you get a reasonable salary, so you get a W-2 as well, so you're part of the payroll, so also it's deductible. So you get a reasonable salary, which in the start is kind of like probably, you know, 50%, then it goes to 40%, then it's 30%, then it could be you getting 100,000 and you're still getting like probably 10%. Well, you're gonna get the idea, right? And the rest you get a K1, basically the dividends from the corporation. We get them out of the corporation and pass them through to you, right? To your 1040, to your tax declaration. So what is the benefit? So approximately, for every $1,000 of income, you save $150. So that's a good savings. That's good savings. So that's the intro. Now let's see other benefits that S corporations are likely to receive. Actually, that's supposed to say, oh yeah, S corporations are less likely to receive an audit, right? Versus the LLC and the sole proprietor. So S corporations are less likely to receive an audit. Say more on taxes, plus asset protection, like I was talking about. In case something happens, even if you end up going into bankruptcy or anything, it stays in the corporation, in the LLC. So that's another thing. Ability to contribute costs, to effectively to a solo 401k. So retirement structures that you can do for you and your loved ones, especially for you and your wife if you're married. Building corporate credit, so separating yourself from the business, and even in credit situations. and of course, like I said before, decreasing the chance of audit, right, from the IRS and from the Franchise Tax Board. So that's some other benefits that you get from the S-Corp, and of course I can break them through to a little more detail, but basically that's one of the other benefits that you get. Like I talked about the asset protection, how if you, in case if you lose your house, at least you still get to keep your money, or vice versa. If you lose your business, you still get to keep your house. So basically, it's making they call it a bell. So there's a bell, kind of like a little curtain. So as long as you do what you're supposed to, you have good administrative systems in place. You have regulations and stuff for the employees, all the requirements they need. You do your reporting as quarterly, yearly. You do your maintenance, administrative stuff, your minutes, your all those stuff. As long as you do all those, you have your insurance, all the stuff that you need for a business, you're gonna be good. So, and are you a candidate? One of the things that I always tell for an S corp, remember we're talking about an S corporation. There's some expenses that you're gonna have with an S corporation. So the first thing you have to look at is that the savings are having an S corporations at least have to be more than 2,000, because on average, if you don't do nothing else but your taxes and your quarterly reporting, that's how much you're gonna be spending on, a little more than that. So you also have to think about that, But if you have a good business structure even before the S corporation or the LLC, and you're doing what you're supposed to, probably you're already spending some of that money. So basically, that's why I say only 2,000, because if you're doing accounting and you're already spending in accounting, if you're doing other stuff and you're already spending the other stuff, so 2,000 is gonna be the over, expenditure right there. Do you have income subject to self-employment tax? More than 30, 40,000, that's what I was supposed to put there. And that's when it's becoming a better deal, Any restrictions on me operating as an S corp? That depends on your industry. Some industries, I cannot think of one right now. I cannot think of one right now. Some insurance places, they don't let you be a corporation. Some brokerage don't let you be a corporation in the financial service. But I cannot think of one in specific. But there's some industry restrictions on not letting you. But there's always a way to do it the other way. As long as you work independently, there's always ways to do it. But yeah, there's some industries that don't want to pay your corporation and stuff like that, or some structures that are not allowed to do so. So there's some industry. So that's the first thing you have to see. If your industry doesn't restrict that, how much income I need before an S corporation makes sense. Oh, that's why probably I didn't put it on top, right? So how much income do I need before becoming an S corporation? That's what you need to think of. How much will an S corporation cost me? That's where the thing goes there. So that's why the savings need to be at least, and I see that I put more than instead of more than. But okay, so how much will an S corporation cost me? Setup costs, it includes consulting fees, because first probably you want to know what you need to get, and once you file, also service fees plus filing fees, the maintenance procedures, so professional service plus filing fees again, quarterly and annual tax filings, so service plus, I don't think there's filing fees in there, but taxes and all those requirements, all those payments. So payroll, the same thing. So because if you have an S corporation, you have to think of that you, at least, even if it's just yourself, you're gonna require to be on payroll, because remember, that's where we save, in allocating some payroll for you, and the rest leaving in the S corporation when then it goes through the K1. So that's basically where we get the benefit of the savings. So payroll is something that you need to consider, because payroll is gonna be there. And here are some examples of the most common types of ordinary. Oh, and I forget that you know what? I didn't put the slide where I was gonna describe ordinary. But basically, ordinary income is just income that is here. So I got the word. So operational. So that's the word I wanted. Basically, that you, like I said, that you have to you're providing a service, so you working towards doing that service, or you selling a product, and you manufacturing a product. So basically, that's what ordinary income is. So that you're not doing a passive, that you're actually actively participating. So that's what ordinary income stands for. So realtors, brokers, dentists, doctors, plumbers, electricians, internet marketer, import, exporter, real estate flippers, insurance agents, multi-level marketing, financial advisors, consultants, or anyone getting a 1099 miscellaneous for CE income. Contractors, hairstylists, chiropractor, attorney, CPA, restaurant owners, manufacturers, so you name it, everybody that fits in working towards getting money, that's who fits as an ordinary income. So a book recommendation kind of that fits in this becoming a business mindset, because remember I talked about mindset, is it would have been nice if I put the name of the book, right? So the name of the book is Emit, but let me see. I'm gonna find where it is. Emit. Let me see. So is the Emit Revisited. Actually, I'm gonna put a photo of I'm gonna put it in here. So this is the book right here. Can you see it? Can you see it? And that's the Emit Revisited. Why small business don't work and what to do about it, with Michael E. Gerber. This book is actually awesome, and if you're there's some industries that have their own version of the Emit, so it's a good book because it talks about the difference between, well, it doesn't say the difference, right? But it talks about how you started the business, or the mindset that you have, technician, manager, and entrepreneur. So basically, it's go through concept, experience, and perspective, and I love this thing that he talks about, having the end in mind, right? So if you start with the end in mind, that's how you're gonna get better. How would you call it? That's gonna work better towards your goal, because you're always already kind of seeing it. And having a business plan. That's why having a business plan is a great thing. Having a CRM, which I'm barely learning about, like having a CRM is one of the best things. And actually working your CRM, which I haven't done a good job in it, but I'm also learning, still learning, and gonna learn, get better. And I mean, just that CRM. Well, this I'm not talking about this. I'm talking about something I'm doing here in the office, but basically is getting in touch with clients. I mean, that's the key of our business, getting in front of people. So the more people you get in front of, the more chances you have to actually make business, right? So getting in front of people is like the key of business, right? Getting leads, but not getting the leads, actually working with the leads, right? And learning how to get leads ourselves, networking, telling friends that we need a referral, kind of like challenging them, like telling them, hey, dude, get me a freaking referral. Actually, that's it looks like the easiest part, getting in front of people and asking for referrals, but it's not. It's not, because I'm in that situation too. So basically, that is the main thing I wanted to talk about, but I have a few minutes that I wanted to actually, let me see if I can do this, because knowing myself, let me see, let me point it, I'm gonna get in the board here, let me see, share this device, share this screen, then at source. Let me see if I can do this. Let me see if I can do this. Okay. And I don't see it. But can you see it? Can you see it? Can you see it? Okay. Where's? Let me see. Let me do it again. Let me do it again. There it is. I think I'm gonna be able to do this, and I think I'm able. So let me just so actually, which one is A? Okay, so let me go here. So this is, can you see it? Let me get the black one. So a better way to understand this, an S corporation is this way. So here's your operational side. Man, I'm really good at this. And here's your holding side. And here's your 1040 personal taxes, right? So here you have your house, right here in the bottom, still personal. Always recommend to have a revocable living trust that owns your house, that owns your business, and let's say you're here as a sole proprietor, right? Rank. So you're here as a sole proprietor, but you're already, remember what I said, you're already netting 40K, right? Let's talk about 40K, right? So you come with me and you're already netting 40K, and I tell you, you know what? You should become an S corporation. It's a good fit for you. So now, instead of you paying taxes for 40K, I'm just gonna do the 15%. We're gonna say that you didn't pay any income taxes, right? Let's keep it simple. So 40 times 15. Okay, 40. I don't know how to do math, so give me a second. Times 15.3%. So here you're gonna pay just self-employment. We're just talking about Social Security and Medicare, okay? So here you're gonna pay $6,100 $120 in self-employment taxes, right? And we're still missing income plus income taxes, right? Forget my scrolling here. And here in the S corporations, remember we said we're gonna split this 40,000. So we're gonna split the 40,000. Now it's gonna become W2. We're gonna put 20,000 here. Remember when I said when it's little, probably we're gonna half and half, but as we're getting more net income, more money, it's gonna get better and better, better and better. So we're gonna put 20,000 and we're gonna put 20,000 here in the K1, right? So remember, this is just self-employment taxes. So here we're paying only times $3,060, just half, right? I mean, it was a simple math that I had to do it in the calculator, you know. So you see, just in self-employment taxes, we already saved $3,000. And of course, you're gonna say, well, we're still gonna pay taxes for this money, but honestly, it's gonna be a way better deal. And probably in 40,000, you're not gonna save a lot, but it's definitely gonna have a savings. And here's kind of like with 40,000, you're gonna kind of like break even in what you're saving towards what you're paying for the extra. But remember, you're not only getting that, you're also getting the other benefits, which is asset protection. And what you put it here, right? I'm gonna use this, but you're getting asset protection. I'll leave it at that. And also added added risk, lowering added risk, right? Lowering added risk. So that's one of the other two things that you're getting. And plus, you're also getting a better structure that is gonna help you also, you know, corporation credit, or building corporation credit, which that's also gonna help you. And from there on, you're also gonna, you know, probably you're gonna grow, get more clients in, and this thing is gonna get better and better and better and better and better and better and better, right? So this is one of the, put it in a picturesque way, this is basically what it's gonna be. And like I said, the more money you get in here, the more net income. It's just getting better and better. So then also, well, you can also do it here, but you know, there's other benefits that are in this, like the other benefits that I didn't mention, like setting your holding accounts, like your investments. Let me just erase this part here. And how do I do this? Tell you, I don't know how to, should make it bigger. Also, you know, your solo 401k, your investments, your real estate investment, and all of these investments also can save you a lot of money here. And there's ways to structure it through, you know, basically moving the money in all this. So at the end, the money that is gonna come here to your 1040 is gonna be less, and you're gonna get some benefits here. That there's also ways to structure this where It can be all tax free, so those are the ways of. I was not prepared to do this. I wish I like I didn't even think of what I was gonna talk about here. So, but basically, that's basically one of the things that we, as owning our own business and getting the structures, that's the benefits we can get. Mainly saving in self-employment taxes. With those savings, we can convert it into an investment. We can start saving towards a bigger house, probably better car, better equipment for a business. So those are the benefits that we're gonna get from the savings, and the benefits of the structure and all the ways we can actually benefit from that. Here we just talked about self-employment taxes and and having a structure that it has asset protection, but there's way more where that came from. So that's all for today. Again, my name is Marcos, and I will get better at presenting this. So an S corporation is actually one of the best things for us as small businesses, because it helps us a lot in not only the structure and the asset protection, but also in the ways we can also participate in other business and the benefits we can get from that income passing through to our S corporation. So there's a lot of benefits that come with it. So stay tuned, and we're gonna be talking more of this, and of course I'm gonna do it better every time. So that is gonna change too. So stay tuned. If you like this information, like the channel, share the channel, and hopefully I can bring more information for you, better information, better structure, and simpler. I try to learn from the best and the people who explain it better, because I know for a fact I cannot make complex things so easy sometimes. So that's what I do. I learn from the best and try to give you the knowledge I acquire and share it with you, because I just want us to grow, be better, and hopefully if you see that I can help you, or you get in touch with me, and we can see what we can do. Well, have a great night, and thank you for watching, and hopefully I can see you around. And if you have any questions, please message me. I probably didn't see any message, but probably didn't have any either. So message me and I will answer as soon as possible. Well, thank you.